Alrighty. So in today's video, we're going to be talking about how to generate safe weekly passive incomes with options. Now, we want to find an option strategy that can actually satisfy, three keywords that I mentioned here. So what are the three keywords? Right? The very first keyword is the word safe, right? So as much as possible, we want to find a strategy that is much safer than most other option strategies, because in the world of options there are many different strategies, right? And some of them are safer, some of them are riskier. Now, when I use the term safe, it doesn't mean that you totally eliminate all risk in the strategy, right? Because it's not possible. When you're putting money into the market, there will always be some sort of risk. Otherwise, everybody will be just wanting to put their money into this kind of options, which doesn't make sense, right? So safe in the sense whereby we eliminate as much risk as possible, where there's a much higher chance of you winning than losing. So that's the very first keyword, that is safe. Now, the second keyword is weekly. Right? That means to say we want to have a strategy that actually realizes a profit, each week, right? So if you've been watching most of my videos, you notice that most of my videos are actually talking about longer time frames, right? Around the 45 DTE mark, which means to say you want to choose an option that has the expiry of around 45 days or so. So that is not exactly weekly, right? Because it takes quite some time for you to finally realize that profit. So for this video, I'm going to focus on a strategy that can actually let you have a weekly profit, right? That means at the end of the week, you're able to realize some sort of profit. Now, the third keyword is passive income. Now, the true meaning of passive income really is that you do the work once and then the income just keeps coming over and over again, right? So, for example, if you put into let's say you put it into like just bonds, so to speak, right? And then if you put into bonds, the interest will just keep paying you for as long as you keep the bonds, right? Now, when it comes to options, we can't actually have something like a pure passive income because you would have to keep on putting the options. So when it comes to options, the way that I see passive income is whereby you put on the strategy once and then you just leave it all the way to expiration, right? That means to say there is no management. Right, so these are the three keywords. We're going to find a strategy that is safe, whereby you have a higher chance of winning, weekly, whereby you're able to realize a profit at the end of the week, and then passive income, whereby we're pretty much just going to put it once up front, and then after that, we're not going to touch it and leave it and see, what is the income that we can get at the end. That means we're going to leave the options all the way to expiration. So what is this strategy? Well, this strategy is none other than what I call the income grid wheel strategy. So the income grid wheel strategy is a variation of the traditional wheel strategy. And I've created, a few videos on this already, but I want to just reiterate this in how we can use the income grid wheel strategy to actually generate a safe weekly passive income for you. Right? So first of all, if you're not familiar with what the traditional wheel strategy is basically just this, right? So you start off by selling a cash secured put, which means to say you actually intend to get exercise on it. You intend to get assigned on it and then get the underlying shares, right? So if you get assigned on a cash secured put, which is a short put option, well, for every short put option that you have on, if you're assigned, you're going to be long 100 shares. Right, so let's say, for example, the market comes down and at expiration, if you're assigned, you're now long 100 shares per contract. Right, so that's the very first stage of this traditional wheel strategy. Pretty simple. Right, now the next stage is that once you've already got assigned on the shares, you can start to sell a covered call. Right, now this covered call, basically you can either sell it at the money, which is pretty much at the same price where you got assigned at. So for example, if you sold the cash secured put at $19, then at the money would just simply be you're selling a covered call at the same price, $19. Now, the other way you can do that is that you can sell it out of the money, right? Out of the money, that means above where you're assigned at, right? So if you're assigned at $19, you want to sell a covered call anywhere above that. So in this example, as you can see, I talk about selling, at $19.50. That's where you can sell your covered call. So not only do you get the premium, but if the market actually goes up and get you assigned on your covered call, right? What happens is that your shares get called away. Right? If your shares get called away, you now have no position and you simply just repeat the process, right? So as you can see down here, there is a few, income sources that you have just from this traditional wheel strategy. So first of all, you got it from selling your cash secured put. you get the premium from selling that. After that, once you assign, you get the shares, you sell the cover call, you're going to get another premium, right? You sell it, you get credit for this cover call. Now if you were to sell it at the money, and if you're assigned, then this is pretty much the only income that you're going to get, right? Just from selling the cash secured put and a cover call. But if you were to sell it out of the money, then you're going to get an additional income stream, and that is by having the capital gains, right? So basically you were long at $19 and then you sell it at $19.50. So you're going to have a capital gain of 50 cents, right? And you times that by 100 shares, that is an additional $50, right? Let's say, for example, if you were going for just one contract, right? So that is basically the traditional wheel strategy. Now, there is one problem with the traditional wheel strategy, and this is something that quite a number of people have experienced, and I'm pretty sure you have experienced it if you have been doing the wheel strategy somewhere around 2022. Right, so if you did it somewhere around 2022, where the market started to go down again and the market pretty much was in a bear market, what happens is that you'll be stuck with this position down here, right? So you may have sold a cash secured put and then the market just keeps going down. So if the market goes way below your cash secured put and never goes back up, then you could be stuck in the position indefinitely, which is what many people found themselves in, right? They have gotten, quite a number of positions whereby, the market has dropped way below where they have been assigned the shares, right? So what they can only do at that point of time is to just hold on to it. And what happens if the market continues to go down? Then you could lose even more, especially if you're trading, on margin, and you're not paying 100% cash for the shares, right? So this is one of the big issues with the traditional wheel strategy, and this is actually multiplied because a lot of people actually have this wheel strategy on multiple stocks, right? If you have stock A, B, C, D, and then you pretty much entered all of them at the same time, well, in 2022 you'll find that all your positions would be in a very, very big drawdown, right? In certain cases, some people who are in margin, they have actually emailed me whereby, they've caught in a position and they are reaching the point where there's going to be a margin call. So at the point of time, the broker is going to eliminate the position and you're going to realize that loss, which is not going to be good. So this is the one big problem that you have with traditional wheel strategy. So how do you actually make it safe, right? What is the solution to this to make it safe, a safer wheel strategy? Well, the answer is the income grid wheel strategy, right? So basically how it works is that instead of just selling one level, right, like the traditional wheel strategy, what we're going to do with the income grid wheel strategy is that we are going to sell at multiple levels, right? So every level down here, as you can see, level 1, level 2, level 3, so on and so forth. All these are what I call the income grid levels, right? So you want to space them apart, right? Be it 50 cents apart, $1 apart, $5 apart. This all really depends on the price of the underlying that you're trading, the price of the stock. So just as an example, you can see down here, this is on AT&T. And by the way, I'm not doing this on AT&T, right? I'm not doing the income grid wheel strategy on AT&T. I'm just using it as an example because many people, may not necessarily have a very big account. So this is a pretty, low price stock whereby quite a lot of people could just get their feet wet, right? But again, this is not a recommendation for you to get into AT&T, okay? Just make that clear. Now, so for this, what you want to do is that you have multiple levels where you're selling this cash secured put so that you do not get caught in just one level, right? So most people, what they do is that they will split up their capital into different stocks, right? So if you have, let's say, for example, split your capital into 5 separate stocks, right? If you entered all of them at the same time, the market crashes, you're going to get stuck on all of them. So instead of separating it into 5 different stocks, what you want to do instead is you separate your capital into 5 different levels. And then from here, you can see that if the market actually drops, let's say, for example, it drops down here, well, guess what? You still always have something to do. You can keep selling your cash secured put, and if you keep getting a sign, your average price keeps going lower as well. So it makes it easier for you to actually profit as the market goes up. Or if you want to get out of the stock, it's easy for you to, just sell at the break-even price rather than having, your position all stuck at the top level, right? Because if the market just keeps going down and you have multiple levels, well, basically you're going to have many times you can keep selling your cash secured put and your covered call. So let me just show you exactly how that works, right? So you start off by just selling off the first level. So you do not sell all levels at once, right? And the main reason is because if you were to sell all level at once, you're going to find that at level 2, 3, 4, 5, you're not going to have that much premium at all, right? Because it's just too out of the money. It's just too far away. And that's not what we exactly want, right? Sometimes you won't even get enough premium to justify selling that, right? So what we want to do is we want to sell it one at a time, right? How we do that to sell one at a time is basically whenever the price or the stock reaches close enough to that level, then we want to enter, into the cash secure put for the level. So let's say starting off, we just go for level 1, and let's say the market goes down. Now it has to go down below level 1, then this is where we can start to consider selling into level 2. So this is where you go to the option chain, and then you take a look at your weekly options. You take a look at your weekly options, and then you choose, the strike that is coincides with level 2, right? Then you sell it, and then that's how you get your weekly income, right? The weekly premium. And all you got to do is just sell it once and leave it to expiration, because for this strategy, we are pretty much just going to either get assigned, or if it expires, we're going to just keep selling again, right? So once it gets to level 2, we sell the level 2 cash secure put. If it goes down to level 3, thereabouts, again, we sell another cash secure put. And let's say, for example, at that point of time, level 1 and level 2 gets assigned, then guess what? This is where you can start to consider selling the covered call. So again, with the covered call, we do want to sell it according to where the price is near to, right? Near which level. So if it's near level 2, we want to sell the covered call for level 2 first, sell again a weekly option. So this way, again, at the end of the week, you can realize some sort of income through the selling of the premium. And if the market goes up to level 1 again, you can sell the covered call there again. So basically, as you can see, all you do down here is just repeatedly just selling it across, the multiple levels. So you actually do have something to do as the market goes down, rather than if you were to split it across multiple stocks. Guess what? If the stocks goes all the way down, then there's really nothing for you to do. You're just staring at your chart all day long without being able to do anything if you have run out of capital. So just by having multiple levels to sell the cash secure put, you have already made the strategy safer than the traditional wheel strategy. So that is why I say this is, pretty safe, right? However, while it's still safer than the traditional wheel strategy, if you choose the wrong stock, right, and it goes to zero, then you're going to still lose money, right? So this is the very big impact that, really determines whether you're going to be profitable with this strategy or not. And that is choosing the right stock, right? Because if you choose the wrong stock, no matter how many levels that you have, even though you go all the way to $1 of the stock, if it goes to zero, you're just going to lose everything, right? So that is why it's also very important to choose the right stock when you're doing, this income grid wheel strategy. So how do you make the income grid wheel strategy even safer? By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. Well, the answer is by selecting stocks that have the 2 following criteria, right? This is what I look for when I'm doing the income grid wheel strategy. Number 1, you want to look for strong fundamentals. That means we want to have fundamentally good stock. And then we also want to have strong technicals. So this is what we want to look at on the chart. And I'm going to get into each of them right now. Right, so the first one is strong fundamentals. Now, there are many ways for you to determine what's a strong fundamental, and there's actually many criteria as well. Well, I'm not going to go into all of them, right, because this is mainly about trading. So the most important thing that I actually look out for is increasing year-on-year revenue and profit. So what really determines whether the underlying stock is have at least a greater chance for it to go up in the long term rather than it go down to zero. So you need to understand that each stock is actually a company, right? This company is trying to make money, right? They're selling products or services, and what they want to do is they want to make money. And generally, investors want to invest in stocks that they know that over the long term can make money for them. So if you're invested into a stock, or you choose a stock that's actually not making money, then it's going to actually reflect in the share price as well, because there's not going to be that much confidence compared to a company that has actually profits, right? Increasing revenue and increasing profits. So when you take a look at this two company income statement down here, right? You have the first company above and the one below, right? So as you can see down here, the company A, you can see that the revenue in blue is very inconsistent, right? You can see it is up, then it goes down, goes slightly up, goes down again. And the worst part is that the net income, which is represented by the yellow color bar, you can see that it's all below zero, right? It's a negative, right? So that means to say this company has actually not been making money for 5 years. Would you actually want to invest in a stock, or in fact just trade the wheel strategy, where it can be a mid to long term strategy in such kind of stocks, right? It's going to be a little bit risky, right? But whereas take a look at company B, right? Stock B, you can see the revenue is pretty much just increasing, and also the net income is pretty much increasing as well, and it's net profitable over the last 5 years. So this is one of the important criteria that I choose when I want to trade the income grid wheel strategy. Because remember, the income grid wheel strategy can be a rather, intermediate term strategy, right? Because you could get stuck in the stock if the market goes down. So if you get stuck in the stock as the market goes down, this is where, you have to lean on good companies, whereby in the long term, if it goes up, you're going to be profitable again, right? So this is strong fundamentals. Now, the next is strong technicals. So strong technicals, basically what I'm looking out for is many, many years of trading, right? That means it has been in the market for a long time, and the stock, most importantly, has actually survived market crashes and has kept going higher over time. So as you can see, this is company A, same thing, company B. So you notice that company A is not profitable so far, at least the past 5 years. And you can see it pretty much is being represented in the stock. You can see it's so inconsistent, right? It goes up, goes down, goes up, then goes all the way down, and then all the way it shoots up all of a sudden, and then comes all the way down again, right? And this pretty much big jump down here, most likely it's got to do with some sort of news, or somebody is playing it in Wall Street bets, right? So it's a little bit of a hint, so you kind of know what stock this is, right? So you can see that it's very erratic. If you want to do this income grid wheel strategy, it's going to be very difficult, because you have no idea whether this stock is actually going to go up or not, right? And if you're caught in this stock, especially, let's say, for example, you got in somewhere at this point, then you sold another one at this point, you're going to keep selling until you almost run out of money, and the stock, you have no idea it's going to go up. Now, take a look at stock B, right? Stock B is the profitable company, as you can see in the income sheet, increasing revenue, increasing profit. You can see that although the market has gone down in the past, and you notice this is during 2008 time, right? This is during the crisis, the subprime crisis. There was a crash, it came down, but it recovered again. And you notice it has been going up ever since, right? Even in 2020 during the COVID, and also 2022. I think this is 2022, right? This is 2022. This is 2020, right? 2020 is somewhere here. This is the COVID crash. And you can see after the COVID crash, it still goes up. And 2022, there was the bear market. Market came down. And now it's starting to go up again. So if I want to do the income grid wheel strategy, I would rather choose stock B over stock A, right? And if you want to do any strategies as well, you also want to be, prudent about it. You want to choose the underlying that at least have a greater probability, a better chance for it to go back up than down. So that's what I'm looking for, right? You want to find a stock that has quite a long history of trading, and if you can go past 2008 would be very good, because this way you will know what it's trading at. You don't want to just look at the past 5 years, because the past 5 years could show that it's going up. But if you were to go all the way to 2008, all of a sudden you might have seen that the stock was somewhere up here, right? It was trading somewhere up here. Then after that, it came down. Then if you will look at the past 5 years, the past 5 years may just show this, right? Past 5 years may show this, but if you go to 2008 down here, you notice it's much higher. So again, this is something you want to look out for, and it's what I look out for when I'm choosing my stock. So what exactly is this two stocks? And I'm pretty sure you've guessed it by now. Stock A is GameStop, and stock B is Google. This is also one of the reasons why I've actually been doing the income grid wheel strategy on Google for sometime now, right? I just keep selling cash to cover put, cover call, and as of this moment, I'm actually accumulating it, right? Because at this point of time, I still think there's some room for it to go higher. So I'm just holding on to some of the stocks still, right? And then if it goes higher, I will start to sell the cover call eventually. Now, the other stock that also fits into these two criteria about having the strong fundamentals and strong technicals is Amazon, right? Amazon, I think, is also pretty good. So as and when sometimes I will, ad hoc add some shares as well as do the income grid wheel strategy. Now, again, this is not a recommendation for you to go and, do the income grid wheel strategy on these two stocks. This is basically just what I did. And I also created a video on Amazon as well, where I show you exactly how I did the income grid wheel strategy on Amazon. If you haven't seen the video, I'll put the link at the top right hand corner of this video so you can go ahead and watch that. All right, so if you want to get a safe weekly passive income, then you want to go ahead and try the income grid wheel strategy. By the way, if you like this video, then you're absolutely going to love this next video which I have for you. So go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen and you'll be able to get it for free. All right, I will see you in the next video.